Today we're going to be putting the spotlight on the SEBI proposal that has come in for new mutual fund fees. And this is the restructuring. This is just a proposal as of now, but there's a lot of changes that I've spoken about, right? Removal of additional expenses of 5 basis point on the entire AUM. Furthermore, they're talking about some differential TER-based performance, statutory levies that could come in on over and above brokerage cap. A lot more changes and announcements or proposals that they've made. Now, what does this mean for you as investors? What will it mean for brokers as well? The most important one that everyone is talking about in the last couple of days was going to be the meaningful 15 to 25 basis point reduction in this expense ratio. How meaningful is it actually for investors, and will it actually translate into visibly higher take-home returns for an investor if this goes through? Also, by removing that additional 5 basis point expense and offsetting it through the higher base slab, is SEBI truly actually lowering the cost, or is it more like a redistribution that we're seeing?
Look, I think the proposal is a very far-fetched proposal in terms of kind of reorganizing the entire total expense ratio, which has been prevalent in the industry for a pretty long while. So it's a good overall ingest in terms of transparency, in terms of bringing more clarity to investors, and in terms of trying to reduce the cost also down. However, it's not always the cost part, it's also the value part which one has to kind of look at. Now, coming to some computations, let's say a 0.15% overall reduction over a period of 10 years kind of compounds to around a difference of 1.6%, which to any mind is a meaningful number. Look, if I were to take an example of a lump sum investment of rupee 10 lakh and assume it gets invested at a 2% TER and the net return post the TER is 10%, then the corpus goes to around 17,62,000. And if I take it with cut, which is a 1.8% TER, I'm taking TER cut at around 20 bips out here, and assuming the net return then comes out to around 10.2, the return then kind of jumps to 17,81,000 rupees. So there is a differential amount of around 19,500 rupees, which an investor earns extra in terms of return. So it's a significant difference. For large portfolios, it will be meaningful. For small retail investors, I'm not sure whether it really makes a difference in their portfolios. In terms of lowering or redistribution, honestly, I think it's mostly redistribution. If you look at that 5 bips extra which have been taken off, they've actually upped the base slabs. And they have increased the caps on the base slab. So for larger AMCs or larger schemes, it won't impact the overall TER out there. So my sense is it's mostly redistribution and not per se lowering because of the 5 bips removal part.
Okay.